Hey, bam! Welcome back to Talkin Options, where I teach you how to trade options, and I want to answer 3 questions that I always get about commodities. So if you've been following our page for a while now, you know that I trade future options, and that typically means that I'm trading commodities, agriculture. I also dibble-dabble into the currencies, the bonds, and the stocks as well, but I love trading agriculture. And a main question that I get all the time is, are commodities volatile? Let me explain to you the volatility behind the commodities, because they are super volatile, and what a lot of people don't know is that they're actually more volatile than some of the equities that you could trade. So I do want to talk about crude oil, because that's the main one. Crude oil gives you so many opportunities, man, and I have a video that talks about how you can get your money right every single Wednesday trading crude oil with different news announcements that comes out every single Wednesday on supply and demand. Supply and demand is one of the biggest movers, or one of the major reasons why we see volatility in crude oil. And so this article kind of talks about the commodity volatility, and it says here that it's the highest of the asset classes described in this article. And this article talks about bonds. It talks about volatility with stocks and currencies. If you're interested, I'll put the link in the bio. So the quarterly volatility of crude oil has ranged from 12.63% to 90% in 1983. So really quickly, let's talk about what volatility is. So volatility is based off of the volume, the open interest, and then also the fear and greed of investors. So that's the reason why it's very important to understand fundamental analysis, is because that's where you start to understand what is moving the market, what is causing that implied volatility, that quick spike that we saw with orange juice when Hurricane Dorian was headed our way. Well, that is an example of implied volatility and high in volatility that we see with the commodities. So this is telling you right here, yes, the commodities are super volatile. One of the main ones is crude oil. Natural gas is the second. You can see that it says for natural gas, it traded anywhere from 22.56 all the way to 80%. And of course, natural gas is one of the more newer energies in the energy sectors that you can trade. So it's very important to also look at that as well, because in the long term, we can expect crude oil or natural gas rather, to go up. So those are just 2 of the major ones. But then we also can talk about the agriculture as well, because agriculture is super volatile. I'll talk about corn all the time, and this article says it. 10% to 75% for soybeans, but 12% to about 48% for corn. So very volatile. And that's exactly what you're looking for as a trader. Why do you want high volatility? Because you want a lot of price action. The higher volatility, the more opportunity in the market. That's another thing I do want to mention. If you do trade futures by itself, yes, you can be profitable because you can trade future spreads and give yourself diversity. And we see the same thing with natural gas, and we even see the same thing with the commodities as well. So if you are looking for some high volatility, definitely step over to the future option sector, and I break it down all in my mini course, so definitely check that out. The link will be in the bio. Until next time, make sure you talk in options. I'll see you later.